Okay, folks, welcome to FOMC meeting for the 26th of January 2022. And what a week it's been so far. Okay, so it's been, what were we, 4% down on equities Monday, finishing the session slightly positive. A lot of volatility coming in ahead of this statement and press conference with Jerome Powell tonight. The statement will be out in 30 minutes, and we will then have the presser. So that will be Jerome Powell standing up and reading out the statement, and then taking Q&A for about 30 minutes thereafter, bringing us up to 8 o'clock. So just going to give it a couple of minutes here and let some people come into the feed, both on our Discord here and sorry, I'll just kill the browser there. Yeah, both coming into our pro trade room in Discord and also on YouTube. So hopefully got a few people in to share this volatility. So what we're going to do is this evening at about a quarter to, so in about 14 minutes, I'm going to give an overview on what to expect from this statement, from a hawkish stance to a neutral stance to a dovish stance. And between now and a quarter to, we're going to look at charts. So I'll go into charts now in about 3 minutes time. Then at 6:45, I'm going to lead in with what we're looking at for the statement. And then at 7 o'clock, we're going to have this. We're going to hand over to the guys in New Squawk Live on the audio, and we're going to get the statement release. We're going to watch how the markets trade against this statement release, and then volatility should die down after about 10 minutes, 5 to 10 minutes, and then we're going to kind of sit tight until the 7:30 marker, and then we'll get Jerome Powell reading the statements and then answering Q&A. Okay, so we'll just give it a couple of minutes now and let people filter in. And definitely need a little bit of this for the statement. Cheers. Sláinte. So how are the guys doing in the Discord? Couple of crypto traders in here. It's been a tough couple of weeks, boys. Tough couple of weeks. Okay. Give it just one more minute now. Okay, boys and girls, let's have a look at what we're expecting here out of this. And it's really, to just really sum it up, not much actually. Now, it's either going to be not much or it's going to be, I think it's going to be to the extreme here. We may have, on the very extreme, but out of the balance of probability, we're going to have an actual rate hike. But I think that's out of the realms here. I don't see that happening, but you can't fully discount it. I mean, you're looking at 2 to 5% probability. All right. So essentially, in a nutshell, what are we looking at here? Okay. So let me bring it back to the camera. All right. So what we're talking about is the consensus view for this evening is that there's going to be hinting at the conditions nearly being met for lifting off with rates. Okay, so that's starting in March, end of Q1, and that's kind of what has pretty much been signaled so far, going back to the December meeting, and a little bit of noise back in the November meeting. Everything seems to be on track for that. I don't really think people are looking at it being later at this time. Um, there is always this waiting that the Fed kind of say, well, we are relying on data. We are going to be, essentially, they want to be nimble, responsive to changes in the data, in labor force and productivity, and obviously inflation being the big one, right? So, um, but not expecting any modifications to the balance sheet runoff, i.e., a change to the rate of purchases on mortgage-backed securities on corporate bonds. Okay, so on the hawkish side, on the tight side here, we're looking really there to be an explicit, obviously hawkish meaning that they're really aggressive and tightening, right? So we're looking for explicit language about March being when they start the rate cycle, the rate hiking cycle. The use of the word next is quoted here. So, this is what people do. They study the actual paragraphs word for word from the prior statement to the current statement, literally within seconds. And there's algorithms that will do that and will just highlight the word for you and then extrapolate, even if you want to actually take a trade off of that. So, hinting at a 50 basis point move here would be extremely hawkish. I think the market is kind of expecting a quarter basis point hike rather than a 50 basis hike straight off the bat. So, we could get a mixture here of, a little bit of dovishness, a little bit of hawkishness, right? But I think it all comes out in the wash if there is kind of ambiguity, which there isn't usually. That comes out in the Q&A, right? So I think we'll come back and look at the charts in relation to these different views, right? And then for the dovish view, that's really going to be, they're not telling us anything at all, right? So it's just kind of going to be not really talking about when they're actually going to hike and putting specific language around that, or around March, or maybe Q2. But certainly if you hear, on the dovish side, that the rate hikes are being pushed out and, into Q2, and it's not in March and at the end of March Q1, the market's going to absolutely scream to the upside. And, there's been a decent dip, but I think if you get rhetoric and talk about the rate hike cycle starting in Q2, these markets are just going to really be on course for new all-time highs by Friday. And that's to me, that's how I'm looking at this, and how simple it can be. So the balance sheet runoff in the dovish view, really, when they want to end purchasing entirely. We've heard about June, puts us right in the middle of the year. And then obviously, if they also reference to to Monday's sell-off and insecurities in the market, that's going to also feed into the theory that the Fed is actually kind of sitting very close to the printer, and very close to further stimulation should it be needed, and should we really then go on to print a bear market on the SPOs. I know we entered a bear market technically on the Russell on Monday. That was bought back up though, so we got down a bit in the SPOs, and I'll have a look at this in a second. So that's really the spread from hawkish to dovish to what is kind of the consensus view, that they are going to talk about the discussions for the balance sheet final reductions, but they don't have a decision on that. And then really looking at the tightening picture, and not really giving us any further indication or specific language about the interest rates. Okay, so any mention of like timeline in March and the word interest rate hikes, if you just hear that, it's quite hawkish, and I think we won't continue to bounce with these equities. But then obviously an absence of that, or talk of that rate hike being in Q2, I think that's clear to the upside. All right, so let's have a look at the charts now. And I've actually done this in reverse order, but this is actually better. So let's just go over here, to the charts. All right, and let's look at the SPOs as really the main core equity product on these futures markets. So this is the SPOs on the daily. And you can see here on Monday, really sold down back into these July figures. I think this was July 19th lows, and just picking up, the bottom there, a 42.09 quarter. It didn't actually trade to the tick, but it was a funny all day. The volatility came in a couple of different waves, really. VIX, obviously, your complete all-in-one tool that you need to trade against this product. It's your best indicator, really. We were printing highs that we hadn't really, we'd seen them through COVID, but we saw every level that was ever printed on the highs in the VIX through COVID. But prior to COVID, these were kind of 2015, 2016 levels in the VIX that were getting hit. And so, no chance of them, those highs really getting pushed above here yesterday and today, the VIX coming off those highs, and that allows us to get up 1.5 here in the SPOs. So targets, I think if we have a dovish or even a neutral stance here from the Fed, we are going to be, or the FOMC, we are going to be at 44.92s within the end of this session. And I think, if I was on the longs, that'd be kind of worth holding, and seeing if we can print up into this 100 EMA and 20 EMA and 50 EMA, right? Because essentially, sorry, just let me kill the squawk in the background here. Because essentially, I think once we break down like significant moving averages like this here, we do need to snap back to something that's a little more like average pricing, around the 100 and the 20 and the 50, so there's a knot here, and that is going to act as resistance when we do test up here. So, I think there's lots of food for the buyers, and I think there's just waiting time for the sellers now at this point. I don't really see a short thesis coming into play here on this presser and this statement, unless they do give us indication that they're going for 50 basis point hike and it's in March. I think 25 might be priced in somewhat. I think 50 basis point hike, I don't think that's so much priced in, right? So that's really all I'd be looking at for the downside. And I think could we print new lows on the week? Maybe. I don't know if I'd actually want to hit that trade because there's a lot of buyers in this book, and it's put in a really good day across the board on equities today, and I think it could do a bit more. So it could be one of those things where it just doesn't make sense that it goes higher, and that's trading for you. All right, gold. We have seen gold here on the 60 minutes. Really nice breakout there last week, Wednesday. Lovely longs to be had. Easy peasy breakout, pulls back onto the trend, and up she goes into test on this resistance area here. It's a line in the sand that I've had on for actually a number of months now, but well worth it, as you can see. Really a knot for the market to get contained in. Shorts off of the top here, very nice action. And we've hovered around up here for a couple of days now, if not a week, and then testing into key resistance 1854 spot 3, but just not able to hold above this trend. And so I think I just don't see gold as being the absolute go-to risk-off product, apart from bonds, which it used to be, and it's just not there anymore. Is it going to take war kicking off, an invasion of Ukraine by Russia? Maybe. We did a video on gold on YouTube earlier in the week. So you see that key resistance there, the high of the week of the 13th of April 2020 over here came into play, and so that's been the high of the market to this week. Actually, this week came in there on Tuesday, yesterday. So I think down we go on gold. It's just a technical move here. We are pretty much sandwiched between 1800 and 1850s, on the whole. So that's that. What else? Nasdaq. Yeah, Nasdaq's really not that popular of late because rotation. There's all this rotation out of tech and into energy, and I'll get to oil in a second now. But yeah, like I see it. We've broken down on this mega uptrend here. Like, these are daily bars. We've got this mega uptrend that started really in November 2020. Retested again October 2021 and a couple of times in between, and then we just broke down there on the 18th of January. This is the demise of the Nasdaq for now. I still think we need to pull back on the 200 EMA, get some sellers in this line in the sand area here, loaded up there, and then maybe look at the shorts and maybe 20% off the highs, technical bear market, blah blah blah. So levels to trade. Look, I'm keeping these significant levels in the picture. I think they're good to risk off for the longs or shorts. That's up to you. This is just technical analysis, really. But you can see there's been some whopper trades to be had off of these levels today, and certainly I was risking off of the 14,340s on the longs earlier before it kind of broke down there under VIX pressure earlier on. So all right, and finally coming into this, oil and the dollar. I'll cover oil first, which hasn't really seen any pressure from what has been a stiffer dollar. But here we go. So I talked about this quite a few times. I'm going to switch over to the weekly bars here on oil. It just might take a second to pull down about 20 years of data. Tick volume data as well, so it doesn't take usually that long, but you can see here on the bottom of your screen, oil just really nice breakout above this 85.57s today, and it's just been trucking up to pretty much 88's high. Just let me hold on a second. I might have crashed my Sierra charts, thank God no. Parways, so you can still confirm that there. Is it streaming now? Doesn't seem to be. Let's see. Should be coming through. Yeah, I think it's there. Yeah. Yeah, I can see it's live there. All right, just checking in on the live stream. Okay, so here we are on oil on the weeklies. There might be a bit of a buffer delay there. Anyway, here we are on oil, the weeklies. Now it's looking a little bit thicker now in terms of the levels, but I'm picking just some levels that are targets now on the upside. But really, above 90s here on WTI, 107s is the target. Daniel Jurgen, as you all maybe know by now, is the foremost authority on the oil market in the world. He's a director of IHS marketing and an oil and energy specific analytic firm, and they're even looking at 107s here. So I mean, yeah, look, if you got him, hold him. That's all I say. Parwiz has him. I have him. We're holding them. We just don't want to get rattled out below the R1s here, really, I suppose, today. Anyway, that's oil. Nothing to trade on oil, really, over an FOMC. I'd certainly be having a look if they've raised the interest rate in this, or in, well, if they announce for March, but I don't really think it's that much of a big deal. And actually, it's going to be bullish once they do raise the rates here for oil, raising the cost of capital to these oil companies. And then the Dixie, finally, this is really the best barometer to have on how the market is going to interpret this move. Um, Here's the weekly. Now, look, we have massive support came in here once we got back in above the trend. We've come back down, tested 94 spot 6301s, and it's not looking back for the last 3 weeks really from there. So, up we go. Target on the upside 97 spot 6993s for the Dixie. Now, is that move going to happen today? Absolutely not. I'm pretty certain that that will not happen today. Could we get back to this sort of interim high we had here, 96 spot 92s? We could, under the right hawkish sort of conditions. I think we could, yeah, for sure. So yeah, I think so. But that would be a hell of a move. It's been a really hard market to trade on the euro to the dollar. So maybe you want to trade the dollar outright as a pretty simple trade. And for the bonds here, I mean, yeah, I think coming into this, we got 7 minutes to go now. Look, I think the bonds have tried to get on up there. Nat gas, we're not going to talk too much about nat gas over this, but the bonds have just really found it hard to maintain the highs that they've gotten this week so far, and they're like the bond pretty precarious below 170 spot 56. T notes, even if I show you T notes on the daily or weekly bar here, if you look at this, you can see it's just not able to hold here. So there is this target for me back down on this trend. So like it or hate it, the bonds down, real yield rising, and that is going to absolutely smash the shit out of the Nasdaq if we start to breach the lows on last week on this. You're going to get more of that rotation. So that's why at the moment, new all-time highs, I don't feel that warm and fluffy about it for the Nasdaq. Although look, it's supported so far, but bonds have played a tight range today. Thus the real yield being pretty static. Okay, well, anyway, we could go on and on about all that. We're not going to. All right, we've got 6 minutes. We'll get a bit of quiet out of me, and we will hand over to the squawk. Okay. Any questions at all, boys and girls, as well? Just chat me, on YouTube or in the Discord, obviously, as always, guys. So do give me a hit.
And NATO saying exercises can be used as a disguise to launch an attack.
How are the levels, guys, there? The good levels? Thanks, Luca.
Three minutes now till that FOMC statement rate decision.
Right, just so when this hits on the stroke of 7 o'clock, you are going to see max volatility across all these products. You're going to see some serious moves going on. The one to watch really is the Dixie for a barometer, and usually it takes a push, and then it will come back to where roughly where it started most of the time. All right, so don't get caught out buying into a high or selling into a low on the Dixie, or indeed doing similar on the euro dollar or cable for that matter. Remember, you do not have to trade this event. Okay, um, it can be wild. It can be absolutely wild and not make a lot of sense sometimes. Okay, so how this will actually happen is the squawker will come out, and if there is a rate change, which we're not expecting, he will announce that first, and then he'll go into the minutiae of what the key changes are on the document.
1 minute now till the Fed decision. Again, rates expected to be unchanged at the zero lower bound, but looking out for any hints to lift off in the statement. $30. $10. Rates unchanged. Looking in the remarks, Fed keeps target unchanged. Will soon be appropriate to raise target Fed funds rate. Will bring bond buying to an end in early March as originally planned. Prepared to adjust stance of policy as appropriate if risk emerged that impedes its goals, but are getting a nod here to soon be appropriate to raise the target Fed funds rate. We'll continue to monitor incoming information in the economic outlook. Expects to reduce holdings over time of its balance sheet in a predictable manner, primarily by adjusting amounts of reinvested principal. That reducing balance sheet size will commence after the process of increasing the target range for Fed's fund rate has begun. And on is to increase treasuries by $20 billion per month and 10 billion MBS starting in February. That is part of its initial plan to get those purchases done by March.
Okay, so what's interesting here is that they're really looking to get the bond buying done at the end of early March. So that's kind of bringing that right the way forward. It's a little earlier on the MBS and the on the corporate bonds, right? That's quite that's the most kind of hawkish thing that we're hearing here. Okay, so um, apart from that, we have no indication of what we're looking at on the hawkish side here. We're not hearing about rate hikes, specifically March. I'm going to hand back to the squad because he's the one actually processing this statement right now. So what you're seeing is
doesn't appear to be much mentioning of Omicron in this statement, and did, as expected, get that nod to a rate lift off soon.
All right, so no mention of Omicron, so that means, right, COVID, essentially, they don't care anymore right now in a lot of senses. And you're seeing a lift here across equities. So you're seeing NASDAQ now 3.2 up, SPOOs up 2.14, Dow 1.14, and Dow really has a country mile. Actually, they all have a bit of a country mile here to go. And it's that sort of dovish stance here now that, not really any indications. And these equities are on the upside. So you're seeing dollar now back to the bottom of this line in the sand we've been tracking. It's around pivot. I think you could find a bid here now on Dixie. That's a nice place to get maybe into the shorts on Euro. I might take a bit of that myself. Just give it a little bit of risk here. See if we can get some acceleration to the downside as that dollar might find support here. Treasuries coming off. So you're really going to see treasuries, if they go to the downside, what's actually occurring in the background to gold there is as the real yield rises because the bond falls, well, you have to be aware there's an inverse relationship between the real yield and gold. All right, so as the bonds get cheaper, so does gold effectively, and that's why you have that sort of risk on, risk off picture and product set there, right? But this is not much of a big deal. Not much of a big deal. Doesn't seem to be followed through. And now you're seeing that dollar really picking up. Very bullish here. Look at this. Look at this. Very bullish. Extending some targets here on the downside for the euro. Gonna take a little bit of cheese off the table. Just because sometimes you do see surges in the dollar over this sort of volatility, and it's just then no follow through. So I just want to get a good average pricing on this. So don't can kind of tighten up the risk here on this now. Really average or after that. All right, so kind of don't need to look at this. I'll just get my target set there. All right, so this dollar now you're seeing it rising up. Lovely activity on the line in the sand here. Lovely activity. Let me zoom in right here. We've been tracking this line in the sand for quite some time, but really coming into use now. So targeting 96.4114 is on the upside on R2. Let's see how we go on this one. So the euro now going to get absolutely decimated from this. And this is definitely one of the trades the guys will tell you I've been waiting for quite a long time here. So we've got to break down. These are the daily bars, right? We got to break down from this area, targeting one spot, 121.25s on the downside. All right, so really nice opportunity there. Dollar came that off temporarily, let the euro get back up, test on the trend. Nice area to get short, seeing that dollar was going to be supported, and then you're seeing the euro taking a turn. So can we accelerate down and make a lower low on the day today on the euro? It's finding it hard so far. So I'm just going to make sure that I don't get into a nice little trade that makes a zero amount of money. So just worked off a little bit of that already. And I was quite reluctant to trade anything, to be honest, other than oil today. Took a couple of shots on the Dow, but just lost energy for it. We were talking about this area test on the 200 EMA actually as that happened. and I was actually just working oil at the time and didn't really have time to focus on Dow. So kind of regretting it a bit now, let me tell you. As if we do get continuation here, it's a hop. It's a hop and a half back up on the Dow. It's going to be about another 2% up there, is it? Well, it's another 1.6% up on the Dow. Should it go for it? Nasdaq moving here. Target 14,810s and half. SPOOs target up 44.92's quarter. Lovely activity here on the SPOOs. Look at this. Lovely activity. Down to the 200 EMA at 2:30 an hour after the open. And off we go. Look at that. Simple. Simple. Really, really nice. Oh, let me get that one back up. So how's everyone doing out there? So we got about 7 minutes into this statement. The volatility is... Yeah, it's actually pretty dead, to be honest. It's not that crazy. Nasdaq is wild, Luca. Definitely. So once Jerome comes on at the bottom of the hour, 7:30, I'll have his audio streaming live through this feed. And we'll really get, the markets should hold their pattern right now until then he starts actually talking freely after, in the Q&As and after reading the statement from 7:30 on, right? So the first questions, it's kind of like in pecking order of press hierarchy. You kind of get like the actually they say Bloomberg for a little later, but you kind of get like the top tier magazines and newspapers getting the top questions, the earliest questions, and so the quality of the questions tend to taper off. And the closer you get to the 8 o'clock marker. Remember about 4 meetings ago, there was a guy, he was like some analyst in some rag, and he looked like he was streaming literally from his bed, and he's just wearing a t-shirt. Looked like he literally just woke up 5 seconds before he came on camera and started asking questions. It's kind of funny. So yeah, some really nice technical moves earlier today, but apart from that dollar euro skit there, this is pretty dead. It's pretty dead. I'm sure a lot of traders are actually going to be heading off home now because this is really not going to bring too much. The Q&A is really the best part we could hope for on liquidity or turns in fortune here for the dollar, for example, which will drive a lot of stuff. I don't think oil gives a damn about how expensive this dollar can get today. And I don't think the bonds give a shit now either, to be honest. It's not really the event. February's event, I think that's the one where we're going to really get some decent big boy volatility. It'd be great if we got like a surprise hike in Feb. That'd be amazing. Sorry, Nissan Nanu, how you doing? Sorry I didn't get to your question before. Which way is the Euro USD going to move? Well, I think if we can hold pivot here on the lows and the Dixie, I think you're going to get you're going to get sorry, I got distracted by audio there. If the dollar can hold the pivot in this low of base, or sorry, this low here and this area, I think the euro is going to go down. It's going to go off to like over the next month to the downside. Looking at the dollar chart here, we should be moving up. So therefore, euro down, euro USD. That means down. You definitely have to control your risk around this area, though. So, yeah, it's you can see on the hour 1 hour bar now that we have on all these products. That's about as volatile as it's gotten, which is not much at all. If this volatility was a pack of cigarettes, it'd definitely be still cut ultras. That's for sure. Just doing an audio test for YouTube. Can you hear me in YouTube? You guys are looking at the Nasdaq. Yeah, it's quieting down a bit now. Look at that push on the high in the Nasdaq. Jeez, look at that. Retraced pretty much every penny of that. 16 minutes until the presser. Let's launch it. Was that? Oh yeah, Luca. Was that the guy from Yahoo Finance who didn't even bother to wear a shirt? Yeah, he was a bit of a bro. Bit of a bro indeed. All right, so Dow is still within the range on the day. I mean, this is just another opportunity to buy this 34,354s. Yeah, I don't know. I'd rather have Jerome Powell speaking first. Dollar now testing back on this area low. Luckily, I'm not adopting any risk here now. Okay. So it really is a quiet lull of a time. Sold a little bit more to get a better position on the euro there. So uh, basically stopped scratched out. It took some initially on the push down, then stopped scratched out, and then sold a little bit more above pivot there. So let's see if we can hold on this. Maintain a strong dollar. Gold just coming out of the lows below S2. And the Nasdaq is just taking it all right back. So a few people in on YouTube. Thanks for joining, guys. Where is everybody from around the world? All right, 10 minutes to the presser. 10 minutes.